April 26, 2015. Going to start out going over some primary charts that I'll have an eye on and a couple that I know are in play in a major way in the small cap space. So first name you're looking at here is Apple. And Apple, what I want to show is this pretty clear consolidation channel between about 120 and 130 since March, early March, and recently though you started to get higher lows in this consolidation along the way, and you also this past week got a higher high, getting above the first weeks of April's high, and now you're testing 130. Apple has earnings tomorrow after hours, and I like this setup. I won't have any bias into earnings. I think it's just kind of a crapshoot when it comes to that. But as long as Apple stays above this higher low, around 125 from a week and a half ago, she looks good, and I think you can buy all dips versus 125. If she doesn't even come down to 125 and this earnings reaction is positive, then all eyes are on this all-time high from late February, right around 133. And get above that, and 140s are going to start to come into play. So Apple, she's been quiet for the last month while she consolidated, but now we have a catalyst, potential catalyst with earnings. We have the iWatch being rolled out as we speak. So, and also this is all coinciding, coincidentally or not, as the stock is starting to break out of the top end of its consolidation range. So Apple, I know it's been quiet, but looks like some momentum might be ready to come back in. Again, earnings tomorrow, Monday after hours. So I know Apple's a popular one here amongst the option traders. Definitely be keeping your eye on that. Another name with earnings this week, Twitter reports earnings on Tuesday after the bell. Kind of a similar setup to Apple in that she had a nice rally and then kind of fell into some consolidation. Twitter's consolidation hasn't been as long, but it is pretty clear, for the most part, between 50 and 52, you had a brief 2-day lifespan above 52, where you printed 53s at the beginning of April. But if you take those away, for the most part, Twitter has been between this $50 and 52 mark. Not as clean to the upside as Apple, because you can see you're still below the October highs, whereas Apple's at all-time highs. But the point for Twitter that I want to make is, again, just these kind of clean setup channels that you get when you've been trading between a narrow range on the stock for a month or so. In that, to me, on Twitter, it's nice and simple here. If you get back below $50 off of earnings, then I'm looking for downside. These lows from February, around that 45 to 47 range, would come into play. But if you stay above 50, I'm looking for a test on the top end of the channel above 52. And above 52, we can take out the highs in the 53s from early April, and then the October highs just underneath $55 on Twitter. So Apple, Twitter, two names that have been consolidating after uptrends. Twitter's got a little bit more work to do than Apple. Both names, you would think there's going to be some decent volatility either up or down off of earnings. Apple tomorrow after hours, Twitter on Tuesday after hours. So keep your eyes, see which way these consolidations get resolved. If they don't get resolved, if they stay in the channel, then it just is a channel play. If you're holding support, looking for the top end. If you're respecting top end resistance, looking for the bottom end. I want to look at Amazon here. Amazon, good example of how earnings can act as a catalyst. Nice long consolidation on Amazon, really just since the middle part of February. She started churning between the mid 360s and the mid 380s. Pretty textbook channel here. And then on Friday, look at that high volume. Earnings came out Thursday after hours. Stock was up massively, 14%. Big time breakout out of the range, and now we have a very wide gap here. So Amazon's nice and simple to me, because anytime you get a gap like this, which this came at new all-time highs now, you just watch the gap base, the base of the gap. So the base of the gap is the low from Friday. That is 439. Anything above 439 on Amazon, and she's going higher or consolidating. She cannot go lower until she gets below 439. Below 439, she can gap fill. Do want to show this intraday chart on Amazon, because you can see that you had multiple tests at trying to get above 450. You're looking at a 3-minute chart here, by the way. This is from Friday's action. So the 450 line right here, all right, spiked above 450 around 10 a.m., came back beneath it, tried to get the pressure back above 450 around 1 o'clock, but ultimately you couldn't do it. So 450, that's the key breakout on Amazon now to get more immediate term momentum to the upside. Now, what can happen if you get above a level like 50 and you hold the base of the gap? Well, you don't need to look too far. For an example, just check out Netflix. Okay, Netflix, you see, I'm going to go to a 15-minute chart. So Netflix, obviously its gap was much greater than Amazon's, but not a ton greater. So here was the gap up. You held the base of the gap up and just made a marvelous move from 530 up into the 570s before Netflix has cooled off. And then here was the 550 breakout on Netflix, basically right here, that rectangle, and you had about 20 points of upside off of 550. So Amazon, I'm not saying it'll have 20 points of upside off of 450. I'm just saying Netflix held the base of her gap up and then got a nice breakout above 550. The result was a sharp move higher. So maybe Amazon can see a good move higher if she can hold the base of her gap up. If she can't hold that 439 level, then Amazon can definitely gap fill, and really technically no support until the recent high, or the previous all-time high around 410, but you would expect maybe 435, 430, 425, 420, every 5 points would come into focus on the support side. Lastly, in my list of names here is Google. Google had a gap up on Amazon, but unlike Amazon's gap up, which took the stock above previous resistance to new all-time highs, Google ran smack dab into resistance from its late February and middle March highs right around 580, and the stock actually closed below where it opened and was under some pressure in the early part of the morning before recovering. So Google's interesting to me because every time you've come up here in the last few months, you have come down. So will this be another leg down? I don't know. But again, just like on Amazon, I'm watching the base of the gap. I'm watching the same thing on Google here, this 568 mark. If you do not hold 568, and it's only 5 points above it, then I think it's pretty easy for Google to come back down into this 550, 560 range on Google. And then 550 is just the key level to me moving forward, your pivot point, if you will. If you hold this 568 low, then you can stay up here and either go sideways or get a breakout above this 580 to 585 level. If you could go sideways or go up here, that would be a good thing, because you can see number one, number two, couldn't do it. And even if you went back to late October when she bounced off of her October low into from 520 up to about 570, you could even say that this was number three when you stalled out here underneath 570. So this range, bottom line, has been key resistance. Every time it's come up here, it's gotten knocked back down over the last few months. Google's going to need to avoid that if she wants to go higher. Otherwise, this looks like a pretty good shorting opportunity on the stock. As you can see, just kind of another one of these channels, albeit a wider channel, but a channel nonetheless. Key breakout point on Google, pretty simple, just these highs Friday's high is in line with those March highs. So Friday's high exactly was 584.70. I'm just calling it 585. That's what I've got in my notes here that are sitting on my desk. 585 breakout needed to target 600s. So those are some of the primary plays I'm watching in my list. Want to look at one name that has been very tradable. That is VLTC, lower price stock. So first, just want to point out the obvious. Stock went from $2 to $22, gigantic move, and then you went from $22 down to about $11 and found some support. I'm not going to spend a ton of time on the daily chart. I want to break it down more into the 3-minute and 15-minute. But I do want to point out that from your 22 high to your $11 low, you're talking about a near perfect 50% retrace. So big ugly move down. You know, I don't know where it's going over the next month, 2 months, year. Who knows what's going on, right? But in the near term, tomorrow and Tuesday, talking immediate term, this $11 level gives you a very good spot to trade against, in my opinion. I really like the VLTC setup versus $11. I think as long as you stay above 11, you can have a rally back up towards this $13 to $15 level. What happens there, you know, I don't know. See if it can push through that resistance or not. But again, I do like your setup on VLTC versus $11. Want to pull out the 3-minute chart to illustrate this even more. You can see on Friday, washed out to $11, first hour of the day, nice hard bounce. You went from 11 to 12.50. Then later in the day, you came down to $11, nice bounce back up to 11.60 or so. So that $11 level providing good long entries. And on the short side, looks like kind of the 12.50 level provided some good shorts. Once you got below it, tried to hold it in the morning, but got beneath it, and then at 11 o'clock rejected smack at 12.50, back beneath 12, came up to 12.50 again around 12 o'clock and rejected. All right, so $11 to 12.50, that's your channel. Play that channel versus $11 to me. Below 11, you can go beneath $10. Above 12.50, and you can rally back into that $13 to $15 range that I mentioned. All right, those were the stock plays I had personally that I was going to touch on. Any other stock tickers here you guys would like me to look at before diving into level 2? The good stuff, the exciting stuff. Alright, well, let's take a look at some level 2 footage here. So, the first footage we're going to look at is Tesla. And this is from Wednesday, April 22nd, just this past week. You can see the date here in the right-hand corner. Again, this is just recorded footage of my trading from Wednesday. And I'm going to set this up a little bit on Tesla. So coming into the day, you can see pre-market at 9 a.m. and you can always follow the time. I've got it circled there in the right-hand corner. You can see Tesla's gapping up 1.6%. All right, and this is a nice gap up on the stock, and you can see the volume, 100,000 shares. Now to look at the daily chart going into this day, if we look at it, you can see that that was this right here. Okay, nice base on Tesla. Had been consolidating between 200 and 210. So when I saw the stock gapping up, I was feeling kind of bullish on the name because I was like, all right, well, we've been consolidating and now we're gapping above resistance on high volume. Looks like there could be some really solid upside here. So that's the play on Tesla. Just to set that up, that's what I'm kind of thinking in my head, that, hey, as long as you stay up here, as long as you hold this gap, she's got a chance at getting a 215 breakout and going towards 220. So I'm going to fast forward to the bell, and I'm just going to commentate as it is playing out and as she's moving. And there's going to be an instance where she just absolutely rips faces to the upside. And the point of this video, the point of this level 2 discussion, is to discuss when you should chase. When you should say, screw the bid that you've got sitting in there, you just got to hit the ask. That's always a tough decision when it comes to options trading, because usually, you know, especially on something like Tesla and most of the stocks I trade, I know there's at least a 15 to 20 cent spread sometimes. That can mean a 5% difference between getting in on the bid or the ask. I mean, heck, sometimes I'm selling at a 10-15% gain. So if I'm missing out on that 5% difference, I'm cutting into my profits by 33%. All right. So you'll see in this particular video, once we start up, I want you to pay attention to the speed of the tape. All right. This is the main thing I look for, the speed of the tape. Over here, how quickly are these orders going up and down through the wire? And level 2, you know, how quickly are the bids jumping up? All right, that's what I want you to pay attention to. And I want you to remember what you see, kind of embed it in your brain. This is what I do each weekend, each Saturday morning. And I go back, watch this footage. Particular dates stand out more than others, you know, and I kind of look for things and be like, oh, okay, right there, could have done something. Oh, great job doing that. Oh, poor job doing this. And I don't think it'll be hard for you guys to see what was going on here. All right, so we open up on Tesla. Stock is holding 212s, and right now I'm kind of thinking, okay, well, let's see if it pushes above 213 right here. You know, I'll think about maybe taking an entry, but otherwise, if you whack out 212s, I'm thinking I could get in closer towards 211 to 210, because then it looks like a gap fill. So notice right away we're getting a trade every second. All right, you see the trades going through here, and okay, if you just look on time and sales, every second we're getting trades going through. So that tells me there's good speed on this tape, good speed, and that then can get confirmed when you look at a chart and you see the volume over here. And you can see that this volume is already the highest 3-minute volume, higher 3-minute volume than any sequence yesterday. Okay. So the action looks good, but we're still not clearing 213, so I haven't started really getting jumpy with my bid just yet. I'm still kind of observing here, thinking she might come down towards 211. And now you start to pressure these 212 bids. Nice stack at 212.16 though. Could go either way here. Slows down just a little bit. Getting some downticks beneath 212.50. There's an ask in the 30s, so now I'm thinking, all right, she is probably going to whack out these 212s, and I can probably get in, you know, closer to 211 to 210. Okay, here we are. We've got asks beneath 212. Boom, took them out right away, though. Ask again beneath 212. Here's a stack at 212. Down tick. More down ticks. Do they get taken out, or does it keep going down towards 211? Tried to down tick, but it got taken out, and then they got taken out again, and now the asks are gone at 212. I want to replay that because it's very important to pay attention to stuff like this when you see it happening. The number one thing I watch for on level 2, anytime I'm at a dollar mark, particularly when it's a 5 or a 0, you know, 210, 215, 220, 225, but even so at just dollar marks, 211, 212, 213. And what I watch for is who wins? Do the asks have an easier time down ticking and moving lower, or do the bids consistently come back up and take those asks back out above that dollar level? And you just saw it on Tesla. If I rewind it here, okay, you'll see it again. We're going to come beneath 212, and I just want you to kind of count the seconds to yourself. Is it able to spend a lot of seconds beneath 212 and set up to pressure 211.50, or is it only like a 1 count that it's staying beneath 212? And what you'll see is that it's really only like a 1 or a 2 count. There's just no real pressure beneath 212 here on Tesla. Okay, there's 1, 2, 3, took them out. So 3 seconds. 1, 2, 3. Here's more down ticks. 6, 7, 8, 9, 10, 11. All right, 11 seconds. But all we did was get back down to the 211.80s, and now we're right back up. Ask is at 212.30. Let's see if they can come back down here again. So the counts were actually longer than I thought, but there was no extension. All right, there was no extension beneath that 212 on the ask side. Now we got a bidder back at 212. All right, now we're getting some stacking back at 212. So right here I'm starting to watch for the speed up. Boom, there it is. We're speeding up now, racing through 213s, and look at that spike just right away. We're moving up $1. We just went 212.50 to 213.50, and so now you see me adjusting the strike I'm watching. I'm looking to go further out of the money than I was, and I'm starting to get active with my bid. But I still place a bid at $2.90. And I'm not too upset about it because I'm still getting better. I still need to learn. So I'm fine with putting a bid at $2.90 in the moment. But when I watched this on the film, the lesson to me was, Kev, when you see that thing rip $1, when there's a lack of pressure on the bids and you're holding a 2% gap up, you got to chase and go. That's one of the instances when you got to chase and go. If you're able to rip faces like that so quickly, so fast, and look at this bid action. We're at 214s. We were just 212.50 30 seconds ago. Now we're damn near 215s. All right, and I did place a higher bid, I think at 335. So, again, I wasn't beating myself up about it. It was just a learning experience. I hadn't seen Tesla moving like that in a little bit, but I just want to rewind it again because when you get that spike above 212.50 and you see those bids race up, you've got such a small window when you can get in, if you really want to get in. And I'm not saying this stuff is easy, guys. I mean, it's hard to recognize these types of trades, but this is why it's so important. We identify on the film and we watch it, because what you see on Tesla right here, you do not see often. You do not see Tesla go up $1.50 in the blink of an eye like that. This isn't happening every day. So just watch it again. Let your eyes see it again. Here's the asks at 212.50. Pay attention to what the bids do when they take them out. They're at 212.16. They take them out right away, 212.50. Okay, right there I can get in. That's what I got to do if I really want to get in. Could have gotten a 210 call at 465 if I was super quick, but didn't really have my mouse over the buy to open button. It wasn't extremely well prepared for it. Needed to be much quicker. And then right here, again, another opportunity to maybe chase in at 330 if I, again, would have been quick on those 212.50 strike calls. So that's when I placed the 290 bid. And I know why I placed the 290 bid. It's because I was thinking that maybe she comes back down a little bit and I can get filled on a pullback. But, again, that's why I say this stuff isn't easy, because what's the insight of, all right, she's not going to pull back versus she is going to pull back? How do you know? I mean, you just kind of know it when you see it. And this was one of those instances where this type of action, It's got to be split second in order to catch it. But if you can catch it, we're talking easy money. Because look, say for instance I did react quick enough. You see these two 1250 strike calls. Say I reacted quick enough. Let's say I'm in at $3.45 30 seconds ago. Now I can go ahead. I can place an ask at $4.20. Here's another example. You just take out 215s right away. Took out 215s. You're keeping that pressure on 215s. Alright, but like I said, so say I got in, best case, $3.40. I placed an ask at $4.25. I'm selling right now. 2 minutes later, I got a 25% gain. That's why you need to be able to recognize these types of entries, because who doesn't want to make 25% in 2 minutes? So I could keep playing this, but basically, what it is Tesla just went nuts. I mean, straight rip up to 216s. I think she hits like 216.75 before finally chilling out a little bit. I do end up making a good trade at one point, and that's another good lesson, I think. What I liked about this when I watched it back myself, yeah, I wasn't aggressive. I didn't chase when I could have, wasn't quick enough in my recognition, but I did recognize when I was too late in my recognition. All right, the chase trade was at 340, 350. Better believe I'm not making a chase trade up here. And that's what I like about this, is because you'll actually see me place a bid at $5.05 or so in a second. I want you to pay attention to this. Oopsies. Sorry, guys. But so right here, pay attention to this limit order. You're going to see me raise it up to $5.05, but then I'm going to end up canceling that. And that was probably my favorite thing when I watched this video, is that I was tempted to buy it at probably the worst possible price that I could have bought it at. I was tempted to say, all right, I missed the chase. Let me capitulate and just end up chasing right here, right now. But I didn't do it. I then canceled the order, which made me happy. And then I waited for a pullback and end up getting in at a good price. So, long story short with this, know when to chase. Know what the action looks like that signals a chase trade. What that action looks like is it's going to be super fast and it's going to be super big. All right, Tesla, she ain't going to move 50 cents in a minute. She's going to move $1 in 10 seconds, 10, 15 seconds. All right, that's what it's going to look like. And if you don't chase and you're too late, don't then, make a dumb decision and get in at a bad price just because you missed the good price. And here I am. You can see the limit price is now set at 510. I'm about to enter an order. There it is. And then right away I cancel it. Something inside me, as soon as I place that order here, so now you can see me cancel it. And on the film I even hear myself say I feel like that's too aggressive. So I like that. Just fast forward here to show the actual trade a little bit that I end up making. Stock ends up pulling back towards 215, and you can see I've taken an entry at $4.35. End up getting a decent sell on that, around $5. So that's what the chase trade looks like. Well, that's what the action looks like when you should make a chase trade, I should say. Now let's fast forward to the next day. All right, I just showed you Wednesday, April 22nd. Now let's look at Thursday, April 23rd. Still Tesla. Stock is still strong. You can see Wednesday, this is the 3-minute chart up here. You can see that it spent most of Wednesday, after that big move that we just watched on film, spent the majority of the day hanging out between 217 and 220. just kind of consolidating. So now we have a gap down in the stock. Remember, Wednesday we had a gap up. Now the stock's gapping down almost 1%, and it's coming right into this 217 to 218 range, which was in line with the lower end of the channel. So my setup here is to take a long trade on Tesla versus these channel lows and look for a recovery back towards 220. So the things I want you to pay attention to are, number one, the speed. Remember the speed we saw Tuesday. All right, remember what that speed was. It was a trade every single second. It was monster volume coming into the stock. Remember that and keep that in mind when we see how it opens up here this morning. Okay, and the second thing I want you to pay attention to is, again, the activity on the ask side versus the activity on the bid side. How easily are the asks able to downtick? Are they getting taken out? Are the bids upticking? All right, and what does it do when it makes new highs? Lastly, we saw yesterday Tesla, when it made a new high yesterday, meaning the Wednesday footage we were looking at first, when it made a new high through those 212.50s and above 213, remember, it went 214s in the blink of an eye within seconds. All right, so I want you to see what new high action looks like here on Tesla, because again, we need to determine, do we chase or do we leave a low bid in and try and buy a dip? So stock's about to open up in 25 seconds. You can see we've got some pressure on 218s here. Alright, here we go, and we're printing 218s. Trade going through every second here at first. But then it starts to slow down. Now we're getting 2 seconds in between trades. Look at that. 19, 9, 30, 22, 23, but then 25, 26, 28, 29, 30, 32. Alright, so right away out of the gate, I just paused it. Right away out of the gate, here we have orders going through every 1 or 2 seconds, as opposed to Wednesday when we had an order going through every second. And if you don't think that's a big deal, it is. And if you just look at our volume over here, this 3-minute, remember, it was the highest of the last day at the open yesterday, whereas here our 3-minute volume's already starting out lower, and we know that because the time in sales is going through at a slower pace, even though it's only, by a second or so. That's still a big difference. All right, so I'm not thinking as aggressively in my head here, but I still like the way Tesla's defending the 218 action. Right, you're down, you whacked out 218s. Let's see if you get asks beneath 218, just like we were watching for asks beneath 212 in Wednesday's footage. There's one ask at 218. No downticks beneath 218 though. There's one, took it out right away. There's a couple, 1, 2, 3, 4, 5, 6, 7, 8. So I'm able to count 10 seconds here, but we're still in the 217.90s. If we're going to stay below 218 for 10 seconds, how come we're not going into the 80s and the 70s and the 60s? How come we're not getting aggressive downside here? And now we took them out right away. Now we're back above 218, starting to get some bounce. So as soon as I see that, I place a bid at $4.20. I like that, but I'm not chasing here because we're not ripping higher. Look at our time and sales speed again. 45 seconds, then 47 seconds, 48, 51, so 3 seconds in between orders there. Right, we made a new high, but we're still at that high. We did not rip to 219, 220 right away. Remember, Wednesday, we made a new high and we moved $1.50 within seconds. Here we are, we've only moved 70 cents. So I haven't raised my bid. I'm continuing to sit at 420. I like my setup versus 218, but it doesn't seem like nearly as much speed as yesterday, and that's just from looking at level 2 in time and sales. And then if you want to confirm it, you can see on the 3-minute chart, volume over here much lower than our opening volume yesterday. But still the same principle in the sense of who won the battle on the bid or the ask. We saw that ask stack in the 1790s with no downtick extension. It's one thing to spend time beneath a level. It's another thing to process or proceed lower through that level. You know, you need to go 21790s, 21780s, 21770s on the ask if you really want to get downside going. That didn't happen. You got to bounce. That's what's got me bidding $4.20 right here. I feel like I've got a good risk and reward. Still just kind of churning here. Again, the speed just isn't there, so I'm not anxious to get in at ask. And look at this spread, 450 by 480. We've got a 6.6% spread just between the bid and the ask. That's what I was talking about. You know, you can't hit the ask if a second later you need to sell bid. Now you're losing 6% right away. I want the difference of the spread to be on my side as often as possible. Sometimes, like in the first footage, you know, it's not going to be possible. You need to just get in at the ask. But in times like this, in this footage, you really want to use the spread to your advantage and make sure you're getting it on bid. And just to be clear, this action you're seeing right now is much more common of a trading day than the action I showed you with the first footage. The first footage is rare. We do not see Tesla moving like that very often. This action right here, this is par for the course on Tesla. This is just an average day. This is what you see a lot of. Alright, so I did fill my 420 bid. Notice again, we're back testing these 218 bids. So this is what I'm watching on as far as should I stop out or am I getting a good entry here? Okay, you whacked out 218 bids. No asks could come beneath 218 though. I do want to see the bidders pop back above 218 and get the action back up in the high 218s to set up another new high day. In my head though, what I'm thinking here is I probably want to sell that new high day, because unlike yesterday where there was tremendous speed and she made a new high, she really burst, this action here today is much slower, so I'm not as confident in a big time move. So I do place an ask at $4.95 here. Oh no, sorry, I placed an ask at $5.25 here, and that is to sell towards that new high. And again, notice we had just made a new high. We printed 219.20 for a new high, but we immediately came back down into the 219s. Again, just contrasting the difference between Wednesday's action on Tesla and today's action on Tesla, Thursday's action on Tesla rather. I do like that it's staying up on 219s. I think I'll be able to sell my 525 ask. But again, I'm not making any adjustments to my ask because I'm not confident right now that there's going to be a big time move to the upside. Getting some stacking at 219. Again, making a new high day right here, but not blasting off. You're not going 220s right away. And I filled my sell order at 525. All right, so any questions with that level 2 action discussion that you guys just saw on Tesla? Just kind of comparing and contrasting Wednesday's action, which was super fast, really nice rips when you made new highs, to Thursday's action, which was much slower, didn't really rip higher. But the thing they both had in common, and the reason both of them were long trades, is the asks could not sustain any downward pressure on the stock. And I know overall that the stock is in an uptrend over the last couple weeks. You know, my underlying belief on Tesla is she's in an uptrend. So when I see the asks not being able to sustain pressure lower, I'm looking for that overall uptrend to prevail. I had another discussion planned on Google and Amazon, but I'm just going to turn that into a YouTube video because that first discussion went longer than I thought, but that's good. I think there's a lot of good points in there. And for those of you who are live trading members, you can always watch all that footage in the video archive. Every single day is always posted. And I think the biggest thing is people say, oh, well, they weren't my trades, so why am I going to watch them? Well, because of what I just showed you. You have the benefit of seeing what a stock did exactly. Irregardless of what I decided to do in reaction to it, you have the benefit of being able to watch level 2 over and over and over again, just like we did here, and picking up on things like I pointed out that are going to help you make really good trades in the future. All right, one chart request here that popped up, BBRY. So BBRY, I don't mean to be an asshole or anything, but there's just not much to me going on that's any different than the last time I looked at it. We're still in this long-term channel between $9 and $11.50 with two brief spikes in November and January. And right now you're smack dab in the middle of that channel at $10.50. So, I mean, no real bias for me other than she's in a channel. And until I see something consistent above $11.50 or below $9, then I just can't get too excited about the directional movement on BBRY. I think a great strategy here would be selling premium on both sides, puts and calls, because you have just a crystal clear channel on BBRY. If I had to say something about it right here, right now, aside from this $9 to $11.50 channel, I would say that you're testing resistance from this gap down in March, and I would look for a stall out versus $10.50. If you stall at $10.50, I like the downside back towards $10 to $9, but if you can push above $10.50, I like the upside towards that $11.50 channel resistance. But again, no major bias can be formed by myself until I see the stock commit below $9 or above $11.50. Once and if that happens, we can have a much more detailed discussion on it. Any other questions on anything here? Any things we went over, or any other things in general? Hey, if you watch it, if you're watching BBRY and you see it, and you see something going on, then, do your thing. I mean, I don't ever watch this stock, to be honest with you. I'm just looking at the chart. So, Alright guys, not seeing any questions. I would just like to remind everybody that this is a contest week. We've got our trader sweepstakes going on, and this week's sweepstakes is going to pay out $100 to the trader who posts the best win rate percentage. Alright, and this is just simple. Just like a quarterback's completion percentage in football or a basketball player's free throw percentage, your winners, trades that make money, are going to affect your score positively. Trades that lose money are going to affect your score negatively. And whoever posts the highest one will win $100 in cash. We're taking option trades and stock trades, so it doesn't matter what you trade as long as it's an option listed on a stock listed in the Dow, S&P, or NASDAQ, or a stock trade from a stock listed in the Dow, NASDAQ, S&P, Russell, Amex, or NYSE or NASDAQ. You will qualify. You do need 11 total trades in order to qualify for the sweepstakes. But good luck. So, just using my stuff as an example from last week, which was a really good week for me win percentage wise. You can see I had an 82% win rate, 22 total trades, 18 winners, so that would have been a really good standing week. However, the week before, I think I was quite a bit lower than that. Yep, I had a 52% win rate, 25 total trades, 13 profitable, 12 losing. So hopefully simple enough. Everybody understands how you'll be scored, but good luck this week. And free money, guys, $100 prize to the person who posts the highest win rate percentage. Alright guys, I'll see you in the morning. Have a good night.